All right. Welcome everyone to Xplora and our Q4 and full 2024 report. It's great to see everyone here live. We probably will expect to have a record of people joining us online on the stream today as well. And we also have one additional session later today at this very building as well. So we are super excited to see a very big growth in people following the company. As always, or this year, we have with me our CFO, Knut, and our COO, Kjetil Fennefoss, and we will take you through the presentation today. We have quite a lot of good news, exciting news, quite some information to share. So we will probably spend 45 minutes today versus the normal 30 for previous presentations. So just a little heads up in that regard. I will first, as always, take you through some of the key highlights. Knut will then deep dive into some more of the financial details. Kjetil will take you through some of the very important highlights when it comes to operation, and so you can see how the development is going on our various business units and segments. And then I will guide you through some of the post-quarter events, plus how we look into 2025. This time, we actually would like to start with this first screen because it's always very exciting when we start a year, particularly when we started 2024, because we had to share some kind of guidance with you all. So in our outlook statement, in our first quarterly presentation last year, we set out to achieve a couple of very important targets. First, we said we should aim for a revenue target to grow 15%. We also said that our primary focus would be to increase profitability, so we had a very sharp focus to increase our EBITDA. We also then said that subscription revenue and number of subscription would be more important than unit growth itself. If we can choose any day of the week, we rather prefer one new subscriber versus two new watches with no subscription attached to it. We also said on the OpEx side, we should reduce that in percentage of revenue. And we also made a promise we should not increase our CapEx, but try to reduce it. And we set out, when we started the year, to launch our first senior proposition, as well as try to launch our first SaaS service revenue. That's what we stated when the year started. On that regard, we are super happy, of course, to be able to increase our revenue growth. So instead of 15%, we managed 18% top-line revenue growth. We are even more proud to actually deliver more than 100% growth in our EBITDA, our earning on the business, to 72 million. And as you can see, we managed almost 40% growth on our services, and we increased our service revenue on an annual basis by 30%. And as you also can see, our OpEx was down in percentage of revenue, and we actually managed to have a CapEx lower than the year before. When it comes to launching our first senior product, instead, we made a decision to acquire Doro, which we worked on. We'll come back to a lot of those details in the outlook. And of course, as we said on the previous quarter, instead of then launching a product on the senior platform by Xplora, we will then push that into the launch into Doro, of course, after that acquisition. When it comes to the launch of the first services and revenue on the SaaS, we did manage to complete the first implementation in December, and I will come back to some of those details in the outlook statement as well. Before Knut then go into the details, we will have this slide as we have had always. The group revenue for Q4 up 15% to 243, almost 250 million on group revenue in Q4. We had 28% increase in recurring service revenue to 77, and we had a subscription base when we ended the year of almost 360,000 subscription. Gross profit up 17 to 116, and we had an isolated EBITDA on Q4 at 23 million, and we ended with a solid financial situation with cash in the bank of 235 million when ending the year. And with that, Knut will take you through some of the more details.
Thank you, Sten, and good morning, everybody. Sten already presented some of the key highlights for the quarter, and I'm going to go a little bit more into the details. When it comes to revenue in the quarter, we ended on 243, and that's 15% year-over-year growth. And the EBITDA of the quarter ended on, as Sten said, on 23 million. That's almost a doubling from the previous year. The gross margin continues to stay stable, with then service gross margin to be 83%, and that's the most important part of our gross margin. When you look at the distribution of revenue throughout the quarter, we see that in every quarter we have an increased revenue compared to year-over-year. And in Q4, we had then 243 versus 212 the previous quarter. If you look at the total revenues from the year in this graph, it was on 813 million versus then 689, and that's plus 124 million for the whole year. So we have a good growth also for the year. The important point about the gross profit and the contribution from service revenue is that that contribute more and more of the overall gross profit that you can see on the graph on the below. And you can also see how stable and predictable the gross profit from the service part is. In Q4 2024, it was 64 million out of the 116 came from services, and 52 million came from devices. P&L here is a lot of numbers. I'm not going to repeat too many items here. We have a gross profit, as I said, that ended on 116. That's up 17 million from the year before. And we have a total OpEx in Q4 of 93 million, and that's compared to 88 million in the year-over-year quarter. This is 5 million, and the major differences in the expenses here is related to, if you take one item, it's actually the employer tax on the option share program. That is a major part of that 5 million deviation. When it comes to 2024, the full year, as I said, 813 million with a gross profit of 406. That's a 50% gross margin as for a company as a total. And we have then a close to break-even profit before tax, both in the quarter and also for the full year. On the balance sheet, we have already mentioned that we have the cash is 235 million. That's up 98 million year-over-year. You can also look in particular on the inventories. We are on the same level as we had the previous quarter, but before that we had 3 and 4 quarters with inventory levels above 100 million NOK. And the main reason why we are able to reduce working capital like this is that we have more predictable forecast and we are better in our processes. Cash flow. We have been through most of the numbers here as well. There is one item that we can spend 2 seconds on, and that's the CapEx. That's now on 20 million as we expected it to be in the beginning of the year. Last year, we had 24. It depends on how you round, if it's 23 or 24. And if you also remember, we had actually 38 million in CapEx in 2022. So we are now on a quite stable level, and we benefit from the investment that was done in 2022. If you have the key figures for then 2024 as a total, it's the 18% growth in total revenue. We have an annual recurring revenue level now of more than 300 million at the end of the year, and that's up almost 70 million from a year ago. The EBITDA is now 72 million, and that's the 113% year-over-year growth. I have one more thing, and you might have already seen it, but we are also now released a new investor relation web. That is an upgrade from what we have had so far. So please have a look at it, and if you have some feedback, please let us know. Thank you. Kjetil?
Good morning, everyone. I'll spend most of the time today on the service revenue, but I'll also touch upon the smartwatch sales development and also the OpEx over revenue. We set ourselves 3 internal targets for last year. That was to increase the recurring service revenue, and we truly did. It increased by 33% for the year, and that was through expanding the subscriber base. And we also stated that the service revenue from outside of the Nordic should increase and be in the range between 10% and 15% of the total service revenue. We also said that we should sell our smartwatch models at a higher average selling price, and we landed on 4% plus for the year. And also that we should realize economics of scale by reducing the OpEx over the revenue as a percentage, and the result is -2 percentage point for the year. So we delivered on our internal targets. Let's start then with the service revenue. We ended the year with a subscriber base of 358,000. That was an increase of more than 100,000 year-over-year, or 39%. Our service revenue comes from 4 main sectors. Mobile subscription part, which we ended the year with 258,000, has the highest RPU. RPU is the average revenue per user, meaning the customer revenue per month. We had a 26% growth year-over-year, and 53,000 units net growth. The premium activity platform has now landed at 75,000 subscriptions. That's our value-added service that we monetize on top of the mobile subscriptions. We sell it in 2 ways, either by bundling it in as a part of the mobile subscription, or we sell it individually through our Xplora app, for instance, to telcos, which customers then subscribe directly with us. That was an increase of 33,000 subscriptions for the year, or a 79% growth. The B2B subscriptions, meaning when we get revenue from the smartwatches that we sell to telcos, we have that as a new income stream. We now have that with 9 telcos. We have 5 in the US, we have 4 in Europe. So that ended on 20,000 B2B subscriptions. And we have something which we call a service fee. That is the alternative in the Nordics for those customers who select a different operator than Xplora when they opt in for a SIM card. And that's more to leverage and increase the share of our service subscriptions in the Nordic and to maximize it. So it's not the objective to sell as many service subscriptions in that category as possible. It's more to leverage and increase the share of mobile subscriptions over smartwatches. When we then look at the mobile subscription base a little bit more in detail, we see that it increased by 53,000 net for the year. That was a 26% growth. In Q4 last year, we had an increase of 15,000 net. And we have seen a significant development in the German market. I'll come a little bit back to that as well. But Germany accounted for 65% of our net growth in terms of mobile subscriptions in Q4. And we also see that we had an accelerated net growth in 2024. So despite the fact that the customer base is getting older, we see a steeper growth curve compared to 2023. So 53,000 in 24 compared to a net growth of 48,000 in 2023. When we then look at the 53,000 net growth that we had in 2024, we see that we had net growth in all our markets. There are two markets that stand out for different reasons. Again, pointing to Germany, we had 25,000 net growth last year in the German market, and that is actually the highest net growth ever that we have seen in one of our markets in a single year. So a significant shift in the German market, which always has been our largest market in terms of smartwatch sales, but we are now also able to actually monetize on the service revenue in Germany. That comes mainly from our own web shop sales and Amazon sales. You may be a little bit puzzled of the growth in Finland. You see that we grew by 1,000 mobile subscriptions. The reason for that is that we see increased interest among the three Finnish telcos that we do business with. So the majority of our service revenue from telcos actually comes from Finland. And we had a net growth of 14,000 subscriptions or service income from the Finnish B2B telco business, which is the highest in any market. So even if Finland is a bit low on our own mobile subscription growth, it's actually in percentage a very, very high growth of the service income in Finland. Then the premium service, which is our add-on on top of the mobile subscription or sold individually through the Xplora app. We grew that net by 33,000 last year, which is almost 80% growth. And that adds approximately, let's say, from the Nordics then, 30 Norwegian kroner RPU on top of the mobile subscription revenue. As I said, we sell it either bundled in as an option on top of the mobile subscription plan, or we sell it separately through the app. And that's a way of generating also service revenue from the smartwatches that we originally sell without a mobile subscription plan. When we then look in total for the quarter, and that's back to my initial slide where I said that one of our targets was that we should increase the service revenue coming from outside of the Nordics. And as you may remember, we said between 10 and 15%. And the result for the full year last year was that 14% of the service revenue came from outside of the Nordic countries, while it was 17% in Q4. And again, referring to Germany, that's the highest net growth came from Germany in Q4. And we generated almost 7 million service revenue in Germany in Q4, which is an increase of almost 200% compared to the quarter the year before. And Germany then accounted for 9% of the total service revenue in Q4 last year. So I think this is the final slide on the service revenue, but you see that when you look at the device growth last year, we increased from 477 million to 533 for the smartwatch part. And for the services, we increased from 210 to 281. But when you look at the difference on the gross profit part, you will realize that 80% of the gross profit growth last year came from the service part. So that just underlines the importance of why I'm spending 7 of 9 slides on the service part. And it's an 83% margin on the service part. So that's very important for our business. Then let's have a look at the smartwatch unit sales and the average sales price. The smartwatch is the vehicle for our service sales, and that's underlying then important for the service sales growth. So in Q4 last year, we had a sale of 167,000 smartwatches. That's the highest quarterly number ever, and it was a 16% growth year-over-year compared to Q4 2023. For the full year, we had an ambition, internal number of surpassing 500,000, and we did. And that was a 7% growth from 2023. The average selling price is rather complicated to explain because there are so many factors that influence on the ASP. It's, for instance, the currency developments. We buy in dollars and we sell in 4 different currencies. We have a mix of products with different price points. We have different sales channels that we sell at different prices. But despite that fact, we managed again to increase the ASP from 1,063 for the full year 2024 from 1,021 in 2023 to 1,063 in 2024, which was a 4% growth. And there is, again, referring to the German market, there is a different way of selling in Germany. The prices are bundled. So we bundle the price of the smartwatch with the price of the mobile subscription plan. So we basically, 95% of our sales on our web shops and on Amazon in Germany is on a 24-month contract, but we subsidize, reduce the price of the smartwatch, so that influences negatively on the overall ASP for the company. So 20,000 phones in Germany and partly in the US were sold at a reduced price to get long-term mobile subscription plans. So that's a negative impact on the, despite everything else equal, the 4% growth. Important to note. Then my final slide on the operating expenses. Here is very much the effect comes as a result of the growing revenue. And here you see the total OPEX over the revenue split into 3 different categories. So you see in 2022, it was 54%. We reduced it then to 43% in 2023, and then down to 41%, an improvement of 2 percentage points in 2024. We have split that and showed this tier in 3 different categories. We see the employee expenses over revenue. We see the marketing cost over revenue. And here I want to point out, again, the effect of recurring service revenue. I mean, marketing cost is related to acquiring new customers. And with such a growing and high share of recurring service revenue, we get quite a decent effect on that KPI, on the marketing over revenue figures. But also other OPEX develops in the right directions, down from 16.4% to 15.3%. That was my part. Thank you.
All right. That was a lot of numbers, but good numbers. So that's always exciting to share. We now would like to spend a couple of slides to try to make a peek into the future. Before we do that, we have a couple of post-quarter events, so something that happens or started to really materialize after December. And one slide we would like to highlight for today is at least a lot of the investors that has been followed us for a long time have, of course, made these questions. Where are we on progress on these various initiatives? And when it comes to the service, as a SaaS services B2B initiatives that we started early last year, we wanted just to share with you an update on 2 of these initiatives. The objective of this is, of course, to find models where we can sell or license our product or services to other business partner, and again, charge that on a service revenue model. We had initiation of one project in South Korea. South Korea, remember, is the country that actually kicked off the whole development of smartwatches for kids. They were very early in order to progress. So South Korea has always been an interesting market when it comes to the Asian market for us to try to find a way to be involved in. One of the telcos, Stage 5 in South Korea, they wanted to have a collaboration with us and find a way how can they actually use our hardware platform, avoiding themselves to have to develop hardware, as we know, comes with a lot of challenges and investments. So we found a way with that MVNO to license our great hardware platform, and they then directly acquire that hardware from our manufacturer, but pay us a licensing fee in order to use our hardware platform. So no implication for our cash, our further capex and so on, but they will just license our hardware platform and sell it on their own MVNO, or they are MVNO in the South Korean market. Already started a soft launch on our platform in February with a more full commercial launch in May. Another point, Kjetil highlighted our steep growth in our premium service, our activity platform, which contribute for like an increase of 30 NOK ARPU, so it's a good business model for us. But if we all recall some years ago, the whole activity platform was actually developed in a collaboration with 360 in China. We had a pilot there with 60,000 customer joining a live platform, which really developed that whole concept. After a lot of collaboration and integration, we managed, as we said, to make another soft launch on that in December at the end of last year. It has been a lot of, well, not a lot, but there has been some challenges in order to really find the best possible way to distribute it and capitalize. Currently, we have not the ideal visibility on the platform, and we have all, or not we, but they have only integrated one payment solution. And in China, there is a lot of different payment solutions, how to capture the money. But despite all that, so far 60% of the users that are actually clicking on the advertising campaign going into the actual app are now downloading it and starting to use it. And 5.4% of those users are now upgrading to a paid solution. So it's not a significant number yet, but it's a very good start. But we just wanted to give you that update in that regard, and both of these revenue streams will now short-term just be added to our general service revenue, which Kjetil and Knut has been reporting on. When there will become volume into these initiatives, we'll of course report them separately. But so far, it's part of our service recurring revenue stream. But good progress, and we just wanted to share that with you today. The most exciting and important update is, of course, on the youth and senior. And we are basically packing our suitcase, getting ourselves ready to join Mobile World Congress this weekend. Mobile World Congress is, of course, going throughout next week. And on Sunday, we will be on stage jointly with HMD. And I think it's more than 200 global journalists that will participate in that event, that announcement. We are doing the announcement the day before Mobile World Congress starts, so we do it on Sunday with a lot, like I said, from the whole MVNO, from the telco industry, a lot of journalists, because this is a very, very exciting category. As you know, media worldwide, teachers, parents, everyone involved having kids in the age group 10 to 5, the growing concern about all the negative consequences about social media, internet. We're spending 7-8 hours in front of a screen every single day. It's a really compelling market opportunity for us. The product is ready, as you can see here. We have shared it with some of you guys. You have seen it. It's exactly the same spec as a full-blown Samsung or Apple latest generation, but instead of paying 14, 15, 16,000, we are targeting a price range very competitive of that. And all the services are, of course, finally ready to launch, whereby, same as from our Xplora watch proposition, the parent can have more control related to whom should be able to call if you would like to have that opportunity. And also you can manage screen time, what type of social media application can be downloaded. All is fully controlled in the relationship between the parent and the user. If you would like, you can unlock all the services, but you can also have control to really make sure your children have a much more safe onboarding into the experience of smartwatches as well. One of the big benefits as well, everyone here having children in that age group, at least one time you have been able to change or have had to change the screen. It costs you 2,000-3,000 more just to change the screen when you broke it, and you will break it several times. In this proposition, you can even change the screen yourself, and you can do a lot more repair yourself, again, in order to reduce the overall cost. And there comes a ton of different accessory for these products that are very compelling for that target and user group as well. So instead of now paying 12,000-14,000 for this proposition, we're targeting to get it into the market for at least sub 3,000 with exactly the same specification as the high-end smartphones from Samsung and Apple. So just wanted to share that progress as well, live on stage in Barcelona on Sunday to announce this with HMD. And of course, we are also getting ready to step into the senior market with Doro. And post events here, as you all know, deal was closed on 88.3%. At that time, only a couple of weeks ago, we were missing out 427,000 shares to reach the 90 mark. Since then, a couple of weeks ago, we have been able to purchase 319,000 in the market. So we still have a gap of roughly 100,000 share, which we are working on, and hopefully soon will accomplish. We will, of course, only pay 34 per share as the offer made to everyone. And the only practical reason is, of course, we need to make 90% in order to start the delisting from the Nasdaq, as we would like to do as soon as possible. In February, we had the great pleasure to be, you can see us smiling, we had a great pleasure to be on site in Malmö to meet the full team, the management team, the engineer, everyone from Xplora. We had a great experience. It's a fantastic team with a lot of enthusiasm, a lot of knowledge. Of course, in their industry, they just celebrated their 50-year anniversary. So it's a lot of tradition and culture within those walls. So great experience. We did officially also sign an agreement with them, allowing us to go into full implementation of our SIM and operation, even before having the 90% of the share. So with that agreement signed, we are technically and officially allowed to go into full implementation in order to start to both plan and operationally wise start to integrate our SIM card. Next steps, we are continuing to buy the shares in the market, and we can still uphold our Q2 target for be in the market with the Doro product installed with our SIM connectivity. We can still aim to have that launch to be in the market. And also from Q1 this year, we will be presented number with consolidated. So Xplora plus Doro, we will report those numbers combined from Q1. All right. So that means road ahead. We now have a very strong portfolio to reach our goal, 1 million subscription with our kids product targeting kids 4 to 10. From Sunday, when we announce our full proposition in the youth market, 10 to 15, and then also the senior market, 65 plus with the Doro. So going forward, we will still report individually for kids and youth segment as one category and the senior market as one category, but we'll consolidate all the numbers, like I mentioned, from Q1. And just by that, we have become a significantly bigger company starting right now. As you heard Knut present, 2024 standalone, this is history with Xplora. We have, up until now, been operating in 9 markets. We achieved steep growth to 800 million revenue. We managed a EBITDA, a profit on 72 million, and we managed to sell more than 500,000 products. But as of right now, and as we'll present from Q1 going forward, we have doubled our market reach, both with HMD and with Doro. We are now a company that has 1.7 billion worth of revenue when we combine the 2024 number. And we combine almost have 200 million worth of EBITDA, and we have a pool and portfolio of product of almost 2 million, where we can install and integrate SIM. And just to combine it, if you remember the Q4 number consolidated Doro and Xplora, we are now a company that in Q4 had more than 500 million revenue isolated in Q4. And as you also can see, consolidated combined in one quarter Q4, 72 million of EBITDA, which is actually exactly the same number we had on our full year. That's now the consolidated number for one quarter, Xplora and Doro combined. So we have suddenly become a lot larger company with significant number, and that is even before we start the integration of the SIM cards. So now a company of 1.7 billion of revenue, 200 million EBITDA, one full year in 2024. And the big opportunity, as we have mentioned before, is now to pre-install the SIM card in the Doro portfolio of products. And as we said, if we are able to get 1 out of 10 Doro phones to activate our SIM card, as you know, in Xplora, we have managed 25% of the overall volume we are selling to activate an Xplora SIM card. 25% in a couple of years. If we manage 10% of the Doro watches being sold, 1 out of 10, we will have more services, we can have a better price, it's easier to install, and we have additional services on top. If 1 out of 10 will activate that pre-installed SIM card, we will have an additional 300 million EBITDA in year 2. That's our big opportunity, starting from a company now at a size of 1.7 billion, already generating 200 million EBITDA. 10% connectivity will add 300 more, and we have more than 400 million cash in the bank combined. So the outlook, we will leave on that page what we are saying now in Q1, because a lot will happen in Q1, and we expect to come back with even more details within this outlook statement. But for now, what we're saying, we will introduce our first youth product, as we said, in Q2 this year. We will continue to have an annual growth in our kids category. We will introduce the first Doro product with SIM in Q2, and we will prioritize service revenue growth and to really increase our profitability. We will always prioritize to drive shareholder value by increasing service revenue and really increase profits, both on EBITDA and EBIT level, and we'll secure a path to make sure within 4 to 5 years, we'll bring home 1 million subscription. And with that summary of 2024, we can deep dive into Q&A. If questions. Petter, as always.
Yes, thank you. Just kind of overall questions with regards to how scalable the business model is. If we just assume that you are able to be at 50% gross margins, and you get kind of the scale that you want, what type of EBIT margins are you kind of internally then talking about?
I don't think we should comment on that for the time being. As Dan said, we are in the middle of the process implementing the Doro solutions, and I think we should come back to that.
What we can say on that,
Okay.
not directly, but what is interesting to calculate, Peter, is of course, Doro has already achieved 50% on their hardware as standalone, having no service revenue. And as we did say, by testing 10,000 actual user profile, we do see that we will be able to keep the same margin north of 80% on SIM also integrated into Doro product. So we have 30% hardware and 80% on our services. Doro already have 50% on their hardware, and we're expecting to keep the same margin on the SIM for Doro as well. So that gives an opportunity to calculate that question with the growth we have anticipated.
We have also now finalized the price negotiations with the telcos on the wholesale cost of the service, or the telco cost for the traffic. And that just makes us more confident that we will deliver good and high margins also on this section. So we have picked, after taking probably the most profitable segment, which is the kids segment because of low data usage, knowing the fact that 90% of Doro sales is feature phones, which have no data, we are pretty confident that we are going to have a very good gross margin also on those subscriptions.
The youth telephone for the market, the ones between 10 and 15, is that, have you done any pre-marketing or got any orders there or something? Or is it just now launch and then you're waiting for something to happen? Or is it already some pre-orders?
Good question. So just if not everyone heard, or for online user, had there been any pre-order or marketing campaign, etc., for the youth category, or will that basically start when we're launching? To some extent, yes, it will start at the point of launch, but two comments I would like to add on that. One is that HMD have been working for a couple of years with 10,000 families and users in many different markets. So already there is quite a significant, very close user group that of course is very involved in the development. That will be of course targeted toward the first product. But also there is a significant interest from retailers and telco, meaning that we assume to close quite rapidly significant number of deals in that regard once the product is live in the market. But there has not been any pre-sales of the product. And the simple reason for that is because we believe it's such a huge market opportunity that we have also been hesitant in order to release too much information in the market about the exact product specification, pricing, and service application before we actually launch and have secured multiple telco and retail deals.
And we also have HMD's sales organization lined up. This is not only Xplora's sales people selling the product. And as you may remember, we also get a service revenue from the Xplora application, regardless of who actually sells the products, if it's our sales organizations or HMDs. So it's a much bigger potential addressable market and countries and market than we are used to.
Two questions, I think, is Gisle. You focused a lot on the German market, but recently we've also been into the US market, and I saw that that's about 4.2% or something. Can you comment a bit on how that is developing, and also a little bit on the other markets except for the Nordics and Germany, just to have an idea
All right, I can summarize for the live audience. So, Kjetil, why don't you first the question, the development in US in service revenue, for example, expectation and development in the US market, and then comment in general the development in the market in Europe in general, but outside Germany and the Nordics. And afterward, we can comment on the overlap of new market opportunity with Doro. I can address that if you start with
All right.
US.
Yeah. So as you saw from the pie with the revenue distribution in the different countries, you saw that the majority of the net growth in both last year overall and for Q4 was specifically high in Germany. But the question was specifically about the US and other markets. In the US, we have been talking both about, let's say, getting the product approval, which we had last year, but also lately been answering questions regarding on our MVNO setup on AT&T's mobile network. And we completed that finally in January and went live with our AT&T-based MVNO. We had net growth in the US of 3,000 subscriptions in Q4. There are positives and negatives about the US. I would say that we have the products approved and in place. We have the MVNO setup completed with roughly 20 percentage points higher revenue. On the downside, we are facing increased competition, especially from a private equity-based American company that gives away their phones for free. We don't quite understand the business model. And also from a higher churn and return rate in the US market in general, not only for smartwatches, but for products in general. Both in retail and online, there is quite a high return rate that is different in the US compared to what we're used to in the European markets. And also the churn is much higher in the US than in Europe. And that, of course, puts, let's say, a restriction on the net growth that we see in the US market. For the other markets, we have done a shift both now in the UK and in Spain to be much more focused on going online. We have very good sales figures on Amazon, and we have also just lately restructured our web business. Instead of having that individually in each specific country, we have now centralized it and recruited through specialists, also from the US, to drive our web sales business. So we're doing a shift in both Britain and in Spain, going more and more focused online on web and Amazon versus previously we've also been a lot in retail. And the challenge when you are both in retail and online is that you get some significant pricing challenges between the channels. We're trying then to utilize the best of our internal capacity to grow in the channels where we see that we are strong and successful. It was a long answer, but then over to the second part.
On Doro, I would emphasize 2 points. One is that more or less it's a very strong overlap with our MVNOs and the Doro volume, but it's in particular one market where we see an additional big opportunity, which is France, where it seems that Doro have a good presence, and we also have a finalized MVNO setup, but a market that we barely have started to grow our watch business. So I would emphasize France as a big opportunity. Otherwise, we'll focus on where we have the best overlap. And also, actually, to comment one more thing, as Kjetil mentioned on HMD, with HMD, we will get also additional market reach, which might also bring some additional opportunity for all our products.
Just a quick follow-up on the go-to-market strategy with Doro. Have you kind of finalized whether or not you will target 1, 2, 3 initial markets, or if you will go kind of broad in all of their markets?
Yes, thank you for commenting on that, because I didn't actually mention one of those bullet points. It was on the screen. One of the key objectives with our on-site in Malmö is to start to plan exactly what you're saying. Because what we will do with Doro, we would rather emphasize a lot of focus on one country and one channel, and really make sure that we learn to execute that very well, and also in order to provide good data back to both ourselves and the market on how we see that conversion, and then start to scale that model into more channel and more market versus going very broad and try a little bit in all channels and all market. Which channels and which market we have still not defined. But that will be the go-to-market strategy to really make sure we execute well in one channel and one market first. And that's also to replicate the same way we approached the Xplora sales initially. We really executed well to find a model we could scale into more market and multiple channels. All right. That seems to be the questions. Almost on time, but we will hang around for some time. We also have additional follow-up meeting later today, but please feel free to spend some time and have a good day. Bye-bye.